Every few months, markets remind us that headlines can still move billions, but this time it wasn't a rate hike or Fed meeting, it was a microphone in front of Donald Trump. One sentence about easing tariffs, and boom, we watched stocks bounce, Bitcoin spike, and whales throw hundreds of millions into the market like someone flipped a switch. But here's the twist. While retail was scrambling to figure out why Bitcoin jumped, the smart money already had their play in motion, and the bigger question isn't whether Trump's comment mattered, it's who was positioned to benefit from it before it ever hit your feed. This is the part where traders get wrecked and investors get rich, because most people aren't even watching the right signals. They're glued to crypto Twitter while the S&P 500 quietly maps out Bitcoin's next move in the background. It's all connected. And when you understand that, sudden pumps stop feeling random and start looking like patterns. Now, I'm not here to tell you when to buy or sell, but if you still think Bitcoin trades in a vacuum, it might be time to zoom out. What we're seeing now isn't just price action, it's a reminder that narratives shift fast. And if you don't have a plan when they do, someone else's strategy will be the reason yours fails. Now here's where things get messy. Because while the headlines were driving hope, the price action was setting traps. Bitcoin surged, but right behind that move came a wave of late long leverage, piling in at the top, not the bottom. And if you've been in this market long enough, you know exactly what comes next. Volatility, liquidations, confusion, but not because fundamentals changed, because leverage always invites manipulation. And the deeper issue? Most people are only playing one side of the game. They cheer the pumps, panic at the dumps, and miss the fact that both moves were engineered to wipe out the same players. What's wild is how predictable this has become. You see whales enter after a bullish macro headline, retail chases the candle, leverage floods in, and suddenly price dips just enough to knock them all out. Rinse, repeat. Meanwhile, guys like Michael Saylor quietly buy another $500 million in BTC. Trump-linked companies roll out stablecoins, and billions of sideline dollars flow back into the markets without anyone tweeting about it. So you can spend the next cycle reacting to charts and YouTube thumbnails, or you can build a strategy that works whether the price is up, down, or faking both. Just remember this. The real moves are never emotional. They're structured, they're patient, and they play out while everyone else is chasing noise. Make sure you're not trading in someone else's plan. If you're not thinking long-term while others panic short-term, you're not early. You're bait.